Hello, hello, hello. How's everyone doing today? Welcome to our stock trades. How's everyone doing? Feels good to be back in a way. All right. So check this out. So first off, as you can see, it's not my background. I'm not in my YouTube studio, but I did get a microphone because audio you can kind of bear with. I got some patient information in the back. I have some some stuff I wrote down on the board. So I don't want to show. I want to erase it because I still using it. So I put a background up. But I did get a microphone, so at least you it's not annoyingly static. The camera, my apologies. I'm using the Mac camera. You would think after all this time there would be a better camera, but whatever. This is the newer Macs too. So in this video, we're going to go ahead. If you haven't recently watched the All In podcast, I was watching it and I was doing something else on the side of my computer. I got like 3 computer screens here, and I was like, caught my attention. David Friedberg started talking about intrinsic value and Expedia and whatnot. I was like, oh. And then interestingly, on the stock terminal, we had a couple of our folks talk about it too. So it's funny how we're all in sync. We're all basically in sync here, okay? Which is what I like. All right. So we're going to go ahead and share the screen here. I just want to basically let you guys know that I just basically, 2 days ago, whatever, just published our second book. Well, my third book, but the second book for stuff that you're interested in, titled How to Find the Next 10 Bagger. Again, this all profit proceeds will go to charity, okay? Will aid in neurosurgical research, right? So, I'm not taking anything home from this, right? By the way, just very quick, shout out to Con here from England. Welcome, matey. No, I'm just kidding. I can't do an accent like that. That was terrible. I don't know why I even tried, but hey, so this is how to find the next 10 bagger. This basically uses our proprietary software, and it basically shows you the breakdown. It teaches you first. It shows you kind of the whole form of how we do, what is revenue, what is gross profit, what is intrinsic value, what is free cash flow per share, work. Again, it gives you the chronological order of the breakdown of financial terminology, and then it puts it all together. And then I show you a back-tested model of using the intrinsic value calculation before a company before a company became free cash flow positive. And I show you how accurate our intrinsic value is at predicting a particular stock. So from an educational perspective, I'm just trying to share with you and show you basically how an intrinsic value works and how a lot of these hedge funds utilize this. So it's a great way to tie it for the readers that want something very concise. I think this is about 176 pages, but again, they're big font, so it's actually a pretty short book. I recommend the paperback again because it's cheaper. Like, why not, right? Also, congratulations and thank you to all of you guys for the Intelligent Investor. It is now considered the top one release, like the top effing one release. So I am so excited about this in stock market investing. This is amazing. I'm in talks with Dr. Michael Burry, The Big Short. He's given me a lot of advice on books to read, and I've relayed that to our stock terminal members. So I'm hopefully can get a comment out of him so we can put it as a testimonial for the book. But I'm so excited. I want to thank each and every one of you guys. Again, all profit proceeds are going to be given to charity to specifically aid in neurosurgical research, which is my passion. So I really want to thank you guys for doing this. I really appreciate you guys for supporting it. And definitely, if you like this book, you will love this book because this is me. This one I was constrained by Benjamin Graham. I didn't want to lose the ideologies. This is my book right here. Okay, there'll be more books in the future. I'm kind of booked out right now. My brain's booked out. But if you want access to them, you can go down, link down below. You'll see a couple coupon codes and whatnot. Not coupon codes. The links that you can press. It'll take you to Amazon. And then obviously for folks that are interested in the above, right? So now let's go ahead and let's shift gears. Give you 5 out of 10 for trying. All you got to do is try, right? So again, life is about trying, right? Even if you fail, right? You just got to try. Because guess what? And let me just take a quick diversion here really quickly. Because some of you may need to hear this, okay? So there's a lot of people in this world that unfortunately, they have all these great ideas, right? I mean, they're just an idea generating machine. And they're just so smart. They're so smart. Like they're just, the only problem, I guess, the issue on why they're not like, I guess what is the definition of success? That's a whole different story. Is that they don't capitalize on their idea. They don't try, right? I mean, the main reason why I am where I am at right now is because I had an idea and I did it. I had an idea about the book and I finished it. I had an idea about becoming a neurosurgeon and I'm doing it. I had an idea about generating all stock trades and I'm doing it, right? So you want to be the person that is known to get, stuff done, right? Just don't get taken advantage because, in healthcare, people take advantage of you. You got to be careful. All right. So I just wanted to point that out. So now what we're going to do is we're going to remove this. We're going to stop sharing and we're going to share the actual audio version. And I need you guys to yell at me if you don't hear the audio. So this is we're going to watch the whole clip. We might pause it, but we're just going to watch the whole clip together. And we're going to essentially analyze it. Okay. Let me know if you hear the audio.
Going forward, you'll top tick day one, and then the thing will spear down, find a bottom, and then
why
rebuild.
Does that matter? Isn't it ultimately about finding the real market value for the company?
Yeah,
and
price
that it doesn't matter that the price goes down or goes up, that ultimately the buyers that want to pay a certain price will step in and buy. And the folks that want to sell because they think the price is higher than their mark will want to sell.
I agree with you. I do think that it's really about business fundamentals, but there's a lot of people that get caught up in the price as what the quality of the business is. Now, those people are maybe not the most sophisticated people in the world, but they make a lot of noise for not knowing what's going on. And so they can be a real distraction to a CEO trying to run a business.
I remember in 2008, I think I've told you guys this story. It was like November of 2008.
So, Chamath said something interesting there. You tend to really hear the people that don't know what they're talking about make the most noise. Like, just for example, look at Clover when Clover's stock price was down. So many people made a lot of noise, right? Look at when Facebook Meta was down. So many people made a lot of noise, or Nvidia. And look at them now, right? In terms of at least Nvidia and Meta, Clover hasn't realized its potential. And again, we just talked about it in our last video on the Wells Fargo Healthcare Conference. If you have not seen it, please go watch it. No disrespect pointing to, right? But definitely watch it because the Wells Fargo analyst specifically stated that, Clover is about to become free cash flow positive next year, 2024, which is, again, right in line with our calculations. Let's go ahead and continue.
Expedia was trading down to $7, and I saw Dara at some event in March. Yeah, March. And he said, "Hey, our stock's at $7. I can't believe it. I mean, like, everyone should be buying our stock." And that was well off of the price that it had been trading at in 03, 04, 05. And sure enough, if you had bought that stock, you would have made 15x from there to where we sit today. And even more if you sold at the top tick in 2021. So, that's a good chart. So look at where Expedia was in March of 09. It was right around $7. And I think that was, for me, like the first example where I really understood that the price where the market trades a stock.
I'm going to repeat Mr. Friedberg's comment. Very highly intellectual man. His net worth is $1 billion, but you would never actually know that because he's very humble. I mean, for God's sakes, he gets his haircut at Cost Cutters. I mean, ladies and gentlemen, I've done that. I mean, it's kind of funny that I don't want to talk any smack. I mean, he gets enough, but it's funny how I'll retract. What I'll say is it's funny how the most people with the less wealth like to flaunt the most, but the people with the most wealth flaunt the least, especially ones that are highly intellectual, humble, and just down-to-earth people like Friedberg. Amazing gentleman. I just wanted to basically take a moment here and talk about how the stock was around $7. And if you look at it, it went as high as $200. So if we were to just do simple arithmetic and 200 divided by 7, that's a 28x. Again, just like the whole point, of the book, How to Find a 10-Bagger. So for all of my Mastering Stock Market students and Stock Terminal members, I want you, after reading, obviously, How to Find the 10-Bagger, I want you basically to go in and open up the full financial 30-year statement, which we have access to, of Expedia, and look at the statement of free cash flows from those years of 2006, 7, 8, 9, 10, and then back test the model and see if you can calculate the intrinsic value of Expedia, right? And what you will find most definitely is you'll most certainly find an intrinsic value near the upper echelon area, right? So let's go ahead and kind of restart what David Friedberg was saying. I don't want to basically pollute what he was saying in the middle. So I'm going to basically restart it because I really respect this man. Right.
Business fundamentals, but there's a lot of people that get caught up in the price as what the quality of the business is. Now, those people are maybe not the most sophisticated people.
I think I've told you guys, and I can't believe trading at in 03, where we said that's a good chart. Even more if you sold at the top tick in 2021. So, that's a good chart. So look at where Expedia was in March of 09. It was right around $7. And I think that was, for me, like the first example where I really understood that the price where the market trades a stock shouldn't matter as much as the fundamental value of the business if you're willing to be a long-term holder. If you're willing to say,
and you're willing to do the work. And you have to do the work.
Yeah.
Most people are not willing to do the work. They want to look at a price and then they want to imbue all of their own psychological desires into it versus what do the actual ones and zeros of a spreadsheet tell you?
Yeah, but I'm like a pure efficient market guy. I feel like whatever shares should be, people want to sell, they should be able to sell. Whatever people want to buy should buy. The market, and if the stock gets too cheap, there's plenty of capital out there to step in and buy the stock if they think that it's too cheap, and the market will find itself. So
let's do the underwriting of Instacart then.
Were any of you guys investors in
Okay, so basically, let's go ahead and do the math here for Clover, okay? And so very interesting points risen by David Friedberg and Chamath regarding people not wanting to do the work. No, honestly, I really feel like Chamath is actually playing poker. I believe he still is owner of Clover. He's at 4.99%, which we've discussed in the past, makes him not legally obligated to disclose his ownership. And I believe he may be coming back once the value of Clover goes up right before maybe it becomes free cash flow positive. So let me remove this here and let me share the screen on a non-audio perspective because that's just how it works here. So here's the intrinsic value calculation, and I just want to kind of give you an idea of my mind. So Clover last year made around $3.4 billion, but this year it's going to make $2 billion as it's prioritizing profitability. They said that once it becomes free cash flow positive, it's going to sprout and turn on its growth machine once the economic form gets better and inflation is finally defeated. If you looked at the former All-In Summit, Larry Summers, or prominent figure politically, Harvard professor and the former Treasury, Secretary of Treasury, he started talking about how, he's a little bit cautiously optimistic regarding inflation. And essentially, and how like used car prices and oil really made inflation go up to 9%. And now that it's really the muddy type of inflation, anywhere between 3 to 5% has been pretty muddy. So he's kind of scared that inflation may stick around a little longer than what's anticipated. But I believe that if the inflation does get fixed, then we can finally restart, and we might actually, for the first time of our lives, given United States limited amount of data, given that we just hit our 250th anniversary, might actually have a soft landing. So in regards to this, we're going to go ahead and just calculate the intrinsic value for Clover, and we're going to assign different growth rates, and we're just going to get at it. We've done this multiple times, but I was going to go ahead and do a nice net income analysis. But we've done this in our past videos regarding sharing with you how Clover is actually getting stronger as a company and how it's improving its profitability metrics, given that it just hit EBITDA adjusted positivity. Hey, from Sweden, how are you doing? So I don't have a crystal ball, but I'm willing to stick it out in the long term, because I know that when I discount future or estimated future free cash flows, I know that ultimately the market will realize the value of this company, and then I'll be there before everyone else. And the pessimist now will soon become an optimist, and I will sell to the optimist as I have previously purchased from the pessimist. Restart that if it didn't make sense. So here's let's say $2 billion there, and we're going to go ahead and put them at actually 7.5%, because that's actually the rate of Humana in terms of its free cash flow. And we already know that with its Clover Assistant, they're actually growing at a better rate of Humana in terms of their MCR. And they're about to have their Clover Assistant debut, I think, in beginning of October. So that'll show us some cool stuff there. So 150 million free cash flow. We're just going to put it here. It doesn't matter what year. It just takes the average right here. Okay. Then we're going to go in 10 years into the future, but this time we're going to grow it at 15%, 25%, 35%, 40%, and 45%. Okay. Just to kind of give you an average of where this can be. So again, shares outstanding. Again, a couple million off doesn't really change the price, right? Fractional by $1 or $2, right? So if you look at it right now, based off of a 15% growth rate, you could see that Clover should be hovering anywhere between $7 to $10. It is tremendously undervalued. I mean, a recession is 3% at $3, right? Which is insane, right? Now let's go ahead and jump into 25%, which is on average how these new Medicare Advantage plans are working. Their growth rate, you get a $21 price target. Okay. But let's say, for example, that they turn on their growth machine anywhere between 35, 40, and 45%. Now, we've seen them grow more, but let's say if they adjust it, let's say to 35, you can see the stock price now jumps up to $42, right? We do 40, it jumps up to $59. And look how insane, just 5 more percent jumps up to $82, right? So the whole point of the intrinsic value is, it tells me, there is value here. There is a hidden value here. There is an undervalued element to Clover, and we know that. And I mean, think about it. Clover, Chamath Palihapitiya got in on Clover around $4 to $5, given my past research, which I'm not going to go into right now. You can watch my videos, right? And interestingly, tell me a time in history where you are able to get in at a lower price than the people that created the company in terms of making it go public. Well, I'll tell you, the dot-com bubble and a couple of moments after the Great Depression in 1929. We're living in an opportunity here where artificial intelligence is, we're at the cusp of it, and there's just so much innovation. So, and I want to speak to the doctors here. I want to speak to the doctors real quick here, okay? So I'm just going to put like a little doctor picture here, to the doctors, right? This is a little image to the doctors, right? To the doctors, okay? I think that's a medical student, maybe, right? The white coats here. They make it awkward for us to wear white coats, even though they give it to us. But anywho, to all the doctors in the room, how stubborn are you? I mean, how stubborn are doctors? They're so freaking stubborn. If Clover came to a doctor and says, we have this amazing, amazing AI company, you want to use it? Doctors are going to say, buzz off. They're not going to listen. But what Clover did is they packaged their AI company in an insurance company where in order for a doctor to get paid, which they want that moolah, right? They're human too. In order for doctors to even take care of their patients, they need an insurance. The patient needs insurance. They have to use Clover. So they pretty much pinned the doctor into basically force feeding them the software. Then the doctor chews on it. I like this software, right? And it's a great way to spread your AI, which is pretty impressive how they thought about that. Because I'll tell you, doctors are very slow adopters. I mean, if you look at industry, I think healthcare, like as someone who's in healthcare, is about 20 years behind industry. And if we're 20 years behind industry, where was Apple, Microsoft at 2010? That's where healthcare is right now. And the growth that we saw from 2010 for Apple, Meta, Nvidia, the growth we saw from 2010 to 2020 was just amazing. The question where I'm a little bit skeptical is that easy monetary policy. I don't know how many times the U.S. can create zero interest environments. If you followed Ray Dalio in terms of the New World Order, I mean, it's fine. It's quite frightening. We're having a new contestant in China. The All In podcast and All In Summit didn't really talk about too much about China's decreased capacity for generating new children, as there is a decrease in that, which will potentially affect their GDP. I'm thinking out loud right now. Hopefully it makes sense. But I think we may be inclined for another 0% interest rates. And for folks that, understand the opportunity here is growth stocks really, really tend to outshine during these environments. And we're slowly getting there. I mean, the United States is about to refinance their debt. And essentially, because of their refinancing, they are going to capture this 5% interest rate, which will, I think, cause $1 trillion around that in just debt. So, the United States definitely has to make some changes. So we know that as a rate, we know that that's a kind of like a pin for them. And we know that Bill Ackman has been shorting long-term treasuries, indicating that saying that they're going to go down, meaning that bonds are going to look less appetizing. So we'll see how things play out. But overall, as of anything in the company, the fundamentals always outshine. And if Clover Health is able to deliver, what I'm basically showing you now, and it might be hard for you to realize, it's like, well, how can this guy with only how many subscribers? 6,000 subscribers, approximately 5,800, 5,900. By the way, please subscribe. There you go. There's my little plug in there, and please like the video if you haven't done so. My little YouTube plug. God, I hate when they do those. It's so annoying, but you got to do them to get the video out there. you might be asking yourself like why how is someone like you talking about this? Why isn't everyone else talking about this? Well, I honestly don't know. I don't know why people, it could be our educational system, could be a lot of people in this country. I mean, we can Google it. How many people in the USA are good at math? I mean, I don't know what is the percentage. Yeah, the national. I mean, I guess what I'm trying to say is it's not a lot. People are really bad at math. American students have a math problem. And I don't know what the y-axis here is. Sorry, my dog was breathing hard. I'm like, is he dying? He's doing good. So it's unfortunate because if you look at here, this is a terrible graph because you can't even see it, but the country struggling with math the most. Well, there it is. United States. So maybe that's why. And this is just simple algebra. There's no calculus involved. It's kind of sad. People don't know it, but I'm glad that people are recognizing the importance of finance. I think that's important. If I can share with you an honest story, people are recognizing that it is important investing. But if I can share with you an honest story, when I was an undergrad, I used to make fun of the people in business school because I used to see them just partying every week. And I'm like, what are these idiots doing? They're just partying. They're just partying, right? What are they doing every week? They're lazy. They're just partying, and then their classes are easy. They're so stupid. But yet again, they come out of business school and a job on Wall Street that pays $200,000-$300,000 with bonuses that brings them up to $500,000-$600,000. And then ultimately, they work hard, and about 10 to 20% of them go into starting businesses and companies, making anywhere between 1 to a limited. There is no cap. And I realized that I was working harder and not smarter. I was at a cigar shop, and I tell the story a lot because it really hit me. It's like a beginning of any bad doctor joke. I was in a cigar shop with two cardiologists. Literally, there were two interventional cardiologists. And they were saying how they were the A students of their class. And they said that the students with the C, because C is equal to MD, pass is equal to becoming a doctor. I mean, the lowest person in med school, the lowest person on their average is an MD. It so happened to be that the lowest person ended up making the most money. And I always been top of my class, right? So it's like I always was like, no, what is this, right? And it doesn't work out that way. So it's very important that you guys kind of keep that in mind, that you really need to understand business if you want to succeed in terms of monetary success. There's obviously more than that. There's family success. But really, if you look at divorce, the biggest factor of divorce is money issues. It's sad to say, but money is a big driver of happiness. It's not the end all be all, but it's the thing that at least makes you have some time to focus on what truly makes you happy as you ascend to the self-actualization part of Maslow's hierarchy of needs. For folks that don't understand that, that's fine. Let me explain to you what Maslow's hierarchy of needs is really quickly. A lot of folks in America right now are struggling. They're trying to figure out their physiological needs like shelter and safety. then love and well-being. The problem is if you don't have this, then all this gets destroyed. That's why you have the divorce issue. And then once you satisfy these needs, you can desire to be what you want to be, which is I think where I'm at now, because of I'm being able to give back. I'm able to create books, have a little podcast going, and be able to give back. Amazon proved it, definitely. I appreciate it, my friend. I think what's his name, Jeff Bezos said, it's funny because my stock price was going down, but the fundamentals of my company were selling a lot of things. It was getting better. So I said, okay, I'm just going to do what I do. This is Wall Street. And he's a bit of a humbling character. He knows exactly, he was just communicating in a way for us to understand a little bit more. But the guy who used to work on Wall Street before Amazon, so he understood the fundamentals and how a stock price can be disassociated from its real actual value price. For all the people that have purchased this book, I just want to call you, just want to say thank you for helping me get to the top one new release. But also, I want to say for the people that actually, go ahead and read this book, you will actually be in the top 10% of the United States and the world, because you understand how the stock market is. If you go down to Joe Schmo down here, in Arizona and where you are, and you would have asked them about the stock market, they would say, yeah, it's gambling, right? It's a stock market's a gamble, but if you were to say, hey, if I was to buy an ice cream shop, is that a gamble? Or if I was to buy Walmart stock, is that a gamble? They would say no, no, no. So you can see there's a lot of gaps in people's knowledge. There's a lot of holes, and before, when I was a kid, I guess now I'm, a little older now, Miley, hashtag Miley Cyrus, when I was young, the song, if you guys don't know, you can play it, right? I used to really believe that everyone could achieve what I could achieve, because if I could do it, everyone can do it. That's true. I still believe in that, but you have to have a growth mindset. I mean, let's be honest, guys. There's 21 of you guys here. Out of all the people in the world, you guys have found me and you guys are listening. That's like an ingredient of a growth mindset mentality. Because then you can take what I say, wash out the garbage. I try not to have any garbage. I try to give you my best, and then listen to other people. Listen to the All In podcast. Listen to the Compound. Listen to yada yada yada. And you guys are learning versus someone who still thinks that they know it all. And that's unfortunate. So you guys are definitely ahead of the game to even know this, because it's unfortunate that you go out there and no one's going to know what we're talking about. No one's going to know, which is why we created the stock market community, because we can come together, mind to mind, and really talk. So just to give you some future directions of where we're going. So first off, very excited about my books. I am going to be taking in the next couple of next year, next year, I will be taking the Series 65, which is a investment advisory FINRA test, where I'll be licensed to give out financial advice. However, I'm not your financial advisor. We're still going to remain an educational platform. Nothing I do is considered financial advice. Even when I do become a financial advisor, I'm still going to advertise that I'm not a financial advisor. The reason why I'm wanting to get my Series 65 is because not now, but in 10, 20 years, because you kind of have to think in 10, 20-year increments if you want to become a brain surgeon. I mean, you really have to think long-term here, right? Because everything takes a long time. But I'm hoping in 10, 20 years from now, if I'm still alive, I'm going to be creating a hedge fund that people can invest in. We can basically go ahead and we'll be able to hopefully beat the market. And kind of the goal is I'm going to most likely say I'm not going to make any money until you make 8%. And then after that, then we obviously charge for a management fee, which is going to be like 2 to 4%, probably on the lower end. But that's in 10, 20 years. So I'm just kind of giving you the direction of kind of where we're going. I know, absolutely. And this is, for me, this is just something fun, right? Something fun that I like to do. And it's something badass, I would say. It's like, hopefully in 10, 20 years, I'll be a neurosurgeon. I'm like, oh, I'm a neurosurgeon with a hedge fund, right? So I think it's a pretty, you want to have fun in this lifetime, and you want to just go out there and just, play, self-actualization. But in the meantime, I'm going to be getting all the licensures. But again, still, like every time, and like what we have in our our Discord and our subscriptions and our YouTube descriptions and all that. Even when I do get financial, advisory license, I'm not a financial advisor. I'm still going to advertise that because I like take what I say as a grain of salt. Take what I say as trash, right? And I want you to verify it for yourself. Oh no, I'm definitely far away from that. There's no way I'm nowhere near that. You got to respect. You got to respect the big Bubba in the house, right? And obviously his, the big dad right here, the father of value investing. No, I would say I'm just a disciple. Again, my primary goal is to save lives in the operating room, but I'm probably not going to have the best returns as Warren Buffett. But what I'm going to do is I'm going to create this hedge fund. And good. Yeah, exactly. Yeah, I was like, no. Right. And then the management fees in the future that I'll collect, I will be donating them to charity to fund a lot of great projects. Because as neurosurgeons, and as a physician, you make enough. You make more than enough. You don't need all this money. So I'm just trying to find ways on how I can take something good where everyone could win, and then I can take the good I do and be able to maybe create a scholarship, donate more to neurosurgery, to get more research, to help more students, to bring more amazing doctors in the U.S. So keep the money to yourself. I disagree. You will never see a U-Haul behind the hearse. No, that's just who I am. That's how I got to be where I am. That's why I'm going to be in the top 10% of all applicants that are applying for neurosurgery. I'm going to be in the 90th, but there's a reason why, is because I put God first in everything I do. There's no reason for me to keep, I have enough, right? And the people on our stock terminal, you guys know I'm doing really well, right? So there is no need to keep that, but it's good to because it's to spread the love and everything. So it's good. No, yeah, I know. I definitely love you guys too, and this is a long haul, and this is not something we're gonna do and a couple videos and stop. My videos, I can maybe in the future I'll hire an editor, but I kind of like it like this podcast. Like, I know it's hard to listen to sometimes. I'm sorry, but it's good to, hopefully in the future, if you guys freaking subscribe, we might be able to have enough subscribers to where, because they're, speaking about greedy, and my apologies if I'm going to insult all the future people that are going to come on this channel in the future, but people are greedy. They want to have a lot of subscribers, and they won't come to a channel with not a lot of subscribers. And I want to bring you guys the best. So if you guys can subscribe, it'll be nice and spread the video, because we can bring other people to, have a better perspective. But I'll find other videos on YouTube. It's kind of like having someone here, like what we did with David Friedberg. and analyze that. But yeah, I love you guys, and that's all I have with that. Hey, well, hell yeah, I appreciate it. Yeah, that man. Oh yeah, that man too. Those folks. Yeah, it's crazy what people, what you know and what you don't know. And it's funny when people know what they're talking about. You look at when people don't. It's like, hey, it kind of reminds me of that meme where you have like two different lines. The line is lifestyle interventions versus taking a pill, and the taking pill line is faster. More people line up, but it doesn't really work. So that's kind of the idea there. Right. Well, all right, guys, that's all I have for you. It's always a privilege and honor to be able to serve you guys. Again, if you guys want to pick up the book, you can go down in the link below here, which you can see. There's two links. There's our top selling book and how to find the next bagger. I recommend just doing the paperback. It's cheaper, and it actually delivers faster. It delivers in 2 days. So yeah, just go for the paperback. Yeah, that's. I think you really will enjoy this book. This is a really good book. You will literally crack the code of Wall Street, right, with this book here. And yeah, that's all I have for you guys. And it's always a pleasure and honor. And I believe we still have this coupon code for our mastering. And again, it is a lot of money. So just don't, I'll be here for a long time. It's going to stay. Don't worry about it. If you can't afford it now. And we have the PayPal 0% interest, and I think I'm going to get Affirm to sign in on. I just got to get my shit together on. Excuse my language. Just got to get my shit together and do that. I'm publishing a lot of papers. In fact, I just want to just share with you guys really quickly here. I'm about to publish this paper. I just sent it in for review at World Neurosurgery. It's titled Discontinuation of Affirmative Action, Consequences of Educational Equity, Neurosurgical Residency and Medical Diversity with a Potential of Adversity Considerations as a New Path Forward. I'm all about stuff like that. So I've been working on that a little bit. So I'll update the Affirm stuff. But yeah, here are the two books, our top one release and one that we just published. It's not a bestseller yet. It'll be nice if you guys can make it a bestseller. So let's go. Right. Again, it'll be all charity. And this is like a honey app. It's not a bestseller yet. But if you guys can, do that, they'll make me very happy. All right, guys. Love each and every one of you guys. And definitely please review the books. Love, to have some stars here and review. Yeah, I'll see you on the next one. Oh yeah, and I agree. I just saw your message there. I agree. They don't do that. No, of course not. They don't even know what future free cash flows is.